This podcast is general in nature and hasn't taken your circumstances into account. It's important you consider your personal circumstances and speak to a financial advisor before deciding what's right for you. Any general tax information provided is provided as a guide only. Now, here's Shane and Deanna.
G'day everyone, thanks for joining us. Deanna and I this week have got a special guest in the form of Eliza Owen, who joins us from CoreLogic. She is the head of research there?
Head of Research Australia, that's right.
Head of Research Australia. So we're going to talk a little bit more about the property market this time around.
So first question, Eliza. Everyone always is dying to know about the property market in Australia. We've seen some signs of a cooling, potentially in the last few months, particularly at the top end of the market in some of the better performing areas. Can you just talk us through what's going on right now?
Yeah, so at a national level, home values are still rising, but the rate at which they're rising has slowed down a bit. So if you look at the past 3 months to July, national home values were up 1.7%, but that's down a little from the 3 months to April, and it's down from a growth rate of about 3% this time last year. At the moment, it's harder than ever to talk about Australia as one housing market. In fact, the range of capital growth between the different cities on an annual basis is at its highest level since 2006, when we had the early thousands mining boom. So on a quarterly basis, you've got this 6% uplift in Perth, all the way down to a 1% decline in Melbourne, and growth has really fanned out. I think it's fair to say that the cheaper markets are generally performing better. So Perth, Adelaide and Brisbane have been very attractive relative to Sydney and Melbourne over the past few years, but that dynamic is starting to change up a bit now.
I saw on CoreLogic data, Brisbane is now the second most expensive city for average dwelling prices in Australia. So you sort of wonder, well, why would people want to relocate to Brisbane or southeast Queensland given that affordability issue now creeping in?
So if you look at the median house value across Brisbane, it's about 2.5% higher than Melbourne. So I agree. I think people are going to be at that turning point where they're saying, is it worth the move? Can I still get better value for the amount of money that I'm able to spend? For some people, certainly in Sydney, that will be yes. But I think increasingly for Melbourne, that's going to turn. And
I guess we can all look at Perth and say, well, that's understandable. You know, they had that long period of underperformance from end of the mining boom in the 2000s or
2014 to
2014 to 20,
yeah.
Long period.
Yeah.
So there's a catch up there, and it's still, I think, fourth or fifth most expensive city. So it's on the cheaper end.
Yes.
But so that doesn't surprise me. What does surprise me a little bit is Adelaide, how resilient Adelaide has been. It doesn't have a lot of interstate migration. So you sort of, well, what's keeping Adelaide going?
I get this question a lot, and I think it's, it is a nice city. And what you get for your money...
Totally agree. It is. I love going to Adelaide.
Yeah. And what you get for your money is quite a decent amount of land and detached house. It was a very slow, steady performer throughout the 2010s and then really shot up over 60% in value since the onset of the pandemic, again coming off a low base, and is still one of the more affordable capital cities when you are looking by median dwelling value. By local incomes, though, it's emerged as one of the least affordable capital cities across Australia.
So when you think about the drivers, I guess, of home prices, what are the main things that drive home prices over the long term?
Over the long term, I would say we just haven't built enough homes for the amount of population growth that we've had. Low interest rates for a long period of time sort of sustained a lot of growth nationally as well. And that was where, from an affordability perspective, the deposit hurdle was sort of the biggest challenge. And now, of course, that's changed with a higher interest rate environment. But I actually think the high interest rate environment that we're seeing at the moment has skewed housing demand to more affordable cities. And that's partly why we've seen Perth and Adelaide. They're really creeping up on Melbourne now too.
So is that evident in the slowdown? You hear this sort of anecdotes that upper quartile property price growth is slowing relative to lower quartile, and maybe house prices slowing relative to units. Is that people getting pushed down the affordability rating, if you want?
I believe so. So we've talked about it across cities, but it's happening within cities as well. Across the tiered home value index, so we look at different chunks different value chunks of the market, the top 25% was up just 0.8% in the 3 months to July, compared to a 3% growth rate in the bottom 25% of values. So that bottom end of the market is anything about 670,000 and below. Within cities, you're seeing in Sydney, for example, areas like western suburbs, inner southwest, outer southwest, they're the fastest growing parts of Sydney at the moment. So areas like Mount Druitt, for example, where in some pockets you can still find a house for under $1 million. That kind of area is really desirable, very fast growing. Meanwhile, you've got declines in the more expensive, Mossman, Northern Beaches parts of the city.
And I guess one thing that surprises me in relation to all of this, you mentioned interest rates. They sort of facilitated a situation where Australians could pay each other more for a house, as we didn't build enough homes. So we had a shortage of housing. Interest rates enabled people to keep paying more and more as the amount they could borrow grew with lower interest rates. Now we've got much higher interest rates, levels last seen in 2011 or something like that. And yet the property market has been relatively resilient. How come people have been able to hang in there? All this talk about mortgage stress. For the last 20 years, I've been told about mortgage stress, people on the brink. And here we are, we've got very high house prices and much higher interest rates, and yet people seem to be hanging in there.
Yeah, it's a good question. And I think there are different levels of stress being experienced in different parts of the market. So for higher income buyers who probably comprise more of the purchasing pool at the moment, there's not as much of an issue there because they haven't gone in with a low deposit level. For parts of the market, though, I think there are some signs of stress. So the outer suburban...
But are they real or imagined? I mean, for the last 20 years, I'd be driving along to work and then there'd be time to talk about the Fujitsu mortgage stress report or something would pop out, and big chunks of Australian households are in stress and about to go bust. And here we are 20 years later, we're still waiting. I would hazard a guess that things are now more stressful than 20 years ago, but people just seem to hang in there.
Yeah.
I know there's some, if you look at listings, you could argue maybe there's a rise in distressed listings. I guess the question is, are we on some sort of brink and about to go off the precipice, or is it a lot calmer than that?
No, I mean, traditionally, and I think it comes back to the very prudent lending measures that we have, that people are tested to be able to service their mortgages at a much higher level.
So this is not pre-GFC USA?
No, absolutely not. I mean, Australia was conservative in its mortgage lending even then, but of course, since the mid-2010s and the Royal Commission, it's become even more conservative, right? So the result is that whenever you get kind of a negative economic shock, whether it's a rapid rise in interest rates or even at the onset of the GFC, what you'll find is that home values don't actually decline that much. Even now, while mortgage arrears are rising, APRA data suggests that they're pretty well contained at about 1.6% of outstanding housing lending coming in late. But when your negative economic shocks come about, it's actually transaction activity, sales and listings that decline. People hold off selling because they can still service their mortgages. And that tends to drop off faster than home values overall. So it suggests a pretty stable market. And at a high level, I would say that people are still able to service their mortgage, changing the composition of payments, so less going into offset and redraw, more going towards the principal and interest. But there's pockets of the markets where listings are piling up and home values are falling. So that, to me, which tends to be outer suburban Melbourne and parts of regional Victoria, I think there is some motivated selling going on there.
So what would we need to see if prices were to fall by 20%? I guess in that sort of like the bear market scenario that you have this 20 or 30% fall in property values, what environment would we need to be in to see that eventuate, or will it never happen in Australia?
Look, even if it did, so you take Hobart, for example, it's probably the closest example right now where values are down about 12% from a peak in early 2022. Most resellers are still making a profit because they've been in the market for a long period of time. Transaction activity is still fairly stable, even though it's lower than levels we saw in 2021. And you know, the downswing is kind of stabilizing. The values across Hobart are just kind of flatlining now. Even in Perth, I think the arrears rate never went terribly high during the extended downturn from 2014 to 2019. So we have had some boom and bust conditions in the market, but overall the mortgage market has remained very stable.
But suppose unemployment went up. You could sort of make an argument that one of the things supporting households in Australia has been low unemployment. So people, if they were struggling, could get more hours, work more overtime, get a second job, that sort of stuff.
Yeah, and I think you're seeing that in the multiple job holders rate, right? That's up to a record high of, I think it's about 6.7%. I could be wrong, but...
But that would strike me as a risk point, that if unemployment went up dramatically, you could have a problem. But what do you, I mean, over my career, I reckon I've seen 60 Minutes and Four Corners, between the two of them, run a housing crash story every few years. It's like they get the old one out and say, can we dust that one off again? Same old story, high debt, mortgage stress, overvalued, it's all going to crash to earth. Sometimes they use the same people, sometimes different people. But it looks like, what I understand has happened again, maybe not on 60 Minutes, that is. But what do you make of those? Are they real, or is it just super bears just coming out every so often? And I mean, I would admit, if you look at traditional valuation measures, Australian property is very, very richly valued. But the thing I've always struggled with is trying to find the trigger to cause a crash, because you've got to have lots of people defaulting on their loans and selling their houses to get prices to fall 20, 30, 40%. In the last downturn, Perth was 15% top to bottom?
Perth was 20%
20%?
Yeah.
Sydney,
so it has happened. It's not like it hasn't happened.
Yeah, it has happened. Sydney 2017-19 was about 15-17.
Yep, that was about 15-16.
Like but to get a real crash, you wouldn't call Sydney having a crash then, or even Perth. Felt bad, but it wasn't crash territory.
So the 2010s is an interesting one. I would say you could argue that the Sydney house market was in a bit of a bubble at the time because it did have such a steep peak to trough decline. And a lot of it came from a shock to demand from changes in the lending environment.
Yeah.
So you'd recall the macroprudential measures of capping interest-only lending, limiting investment lending, and I think it's just monitoring those risks and ensuring that we don't get the kind of build-up of investment speculation that we did beforehand, But it has happened, and I think the bottom hasn't fallen out of the economy. The bottom hasn't fallen out of the mortgage market, even though it has been tough for people in the industry. It's been tough for a lot of homeowners that did buy at the peak of Perth in 2014. It's important to acknowledge that, but it doesn't mean the end of the world.
It does. I must admit, it doesn't seem as speculative this time around.
Well, it's been a very owner-occupier driven boom as well.
So what can we expect then for the next few years? Are property prices going to keep running up modestly, or is it just going to be such a varied market across Australia?
Yeah, it's a great question, and I think it's really hard to answer because there's a few different headwinds and tailwinds that kind of shape the market. At this point in time, you'd expect high interest rates, slower economic performance, would weigh on the market. You're kind of seeing that in the growth rates. But at the same time, real income growth is expected to pick up from the second half of this year. Stage 3 tax cuts might empower buyers. And the high interest rate environment is also kind of constraining feasibility of new housing supply. So it's kind of hard to say. There's a mix of headwinds and tailwinds at play. But I guess in the short term, I'd expect overall housing value growth to keep slowing. Probably a bit of a risk for Brisbane.
But still remain positive?
At the national level, yes. But as you say, a lot of diversity underneath that as well.
So do we get to a point, maybe next year, where Melbourne potentially bottoms out and Brisbane, Adelaide and then Perth sort of start rolling over?
Yeah, I think so. I think that Melbourne's a really interesting case because in a way, it is doing what everyone says they want the housing market to do, which is become more affordable, right? But that's kind of an accident, I guess, of supply and demand factors and relative oversupply, which you've written about as well, Diana. So I think that it will get to a point where it's low value enough that people are wanting to start purchasing there again.
We've seen that the Melbourne market, or the Victorian market, I should say, has been impacted by some of the tax changes that the government's implemented. And obviously government policies are a huge driver of long-term growth in property prices. So when we're talking about making housing more affordable in Australia, what are some of the wish list items that you have that you think we could put in place to actually make housing more affordable, besides, a 30 or a 40% drop to prices?
Yeah. A mining bust, yeah.
Or recession or something.
Yeah. It is a hard one, right? Because if you own a home, you obviously want the value of your home to at least remain steady, if not rise, so that you're getting the value out of the big amount of debt that you take on. And but I think even just looking at the housing market from an efficiency perspective, and I'm not the first person to talk about this, but a big demand side factor that pushed values higher in the past few years has been the reduction in average household size. And even if you look longer term, so I've looked at census data and 4-bedroom family dwellings, the amount of 4-person families in those dwellings has declined across census periods. It's about 27.5% as of 2021. The amount of 2-person family households in a 4-bedroom dwelling has overtaken. So not by much, mind you, but that to me is pretty inefficient. And that's where, you can talk about things like a broad-based land tax, for example, that has people rethinking the size of the dwelling that they're in, whether they really need that, and can we make our housing market more efficient through tax? Some people argue that stick approach won't work and you need the carrot instead. And a really good point is that people like to age in place. So you need to build more high-density dwellings in some of those more empty nester suburban areas. So that's one example. And then I think in the short term...
So that's really tax reform.
That is tax reform. I think that's got to be a part of it.
I mean, the problem with stamp duty is that those people who might want to downsize from those, where there's 4 in the house, now there's 2 or 1, they don't want to do that because they got stamp duty, liable with stamp duty with their next purchase.
That's right.
Whereas if it was a land tax, you'd probably consider, well, do I really need to occupy this amount of land? And because it doesn't impact your decisions to transact or not, you'd be far more likely to downsize. But therefore, stamp duty reform would, make people would free up more housing.
Potentially, yeah. And I think there's models that have been proposed to avoid the kind of double dipping, like giving people a credit on their land tax payment to the equivalent of their whatever their stamp duty was and things like that. But politically, obviously, it's very challenging.
Yeah.
And sort of been tried in New South Wales and Victoria and didn't really do so well. So do people even want that? I mean, fundamentally, we've seen some governments, like Bill Shorten, try and reform potentially negative gearing or the capital gains tax concession. But fundamentally, do most people actually want the value of homes to go down? I think that they probably don't. And these sort of taxes might potentially...
So it's not just the baby boomers, it's millennials.
If you're invested, you don't want to see prices.
A lot of millennials have just taken on a lot of debt over the past few years to become homeowners. So
The Gen Z is soon going to be where the millennials are today, and they won't want to see the prices go down either.
It's a conundrum. And I think, there are some surveys that have shown older Australians would be willing to sacrifice a certain amount of reduction in the value of their home to see their kids get into the market. Because I guess the other element of it is if you are... if your kids can't get into the market, maybe you're bearing more of a cost burden having them live with you.
Yeah.
So there's
supporting them through the bank of mum and dad.
Yeah, very good point.
There are big social issues associated with affordable housing. I mean, there's obviously generational tension and inequalities there, but there's also this point that if you've got to divert so much money to your house, then a lot of savings is diverted from other productive uses. I've heard the complaint that you'd be less likely to work for a startup company because you've got to take that salary hit up front, and you may not be able to do that because of the high cost of your housing. And then there's the situation where the people we want to do ordinary jobs in suburbs, school teachers, police, ambulance drivers and so on, they can't afford to live there. So they've got to travel long distances, which is socially inefficient. So there's a whole bunch of reasons to try and improve affordability.
Yeah, absolutely. And I think that's been partially covered by the Productivity Commission as well. There would be massive social improvements, economic efficiency that would come with cheaper and more accessible housing. But maybe it's not something that the private sector can really deliver as well. Maybe it's something that deliberately needs to be done with more government social housing to compete with the private sector as well.
Yeah, there was a period there, 2015 to 2019, we starts and completions almost got up to the 240,000 per annum level. Not quite, but the mix was different. It was a lot more units. Whereas now those who build units would say, well, we can't make that stack up anymore because of the lack of materials, the lack of workers, governments competing with the private sector. There's so much infrastructure spending going on. So maybe we should wind back the infrastructure spending, free up resources to build more units.
Yeah, I think that's a good point. And that's one of the big issues for the construction sector at the moment is getting projects finished. In the Statement of Monetary Policy, the Business Liaison Program, people in building and development were saying it's those construction workers who do the finishings on property, and also construction workers who work on high density development, because that's similar to the skills that you have on big infrastructure projects. So it's that government spending that's kind of taking away from new housing development as well.
What about, you sort of touched on it, so was it this affordable and then there's social, and this argument that government should be building a lot more homes, maybe in the social area, or maybe even playing a much bigger role. Singapore, a lot of the housing is built by government. I kind of think housing commission homes and longer term problems. I also sort of think, well, why should the government own the housing stock? Surely that money should be better spent on social services and so on. But what do you think about all of that? Do you think government should just be going back to what they were doing in the post-war period, building more homes?
Yeah, it's a good point. The home ownership rates were certainly higher coming off the back of that, and people being able to eventually purchase those homes as well. I guess the main thing is that it competes with the private market, and where I see the lack of social housing development being the issue is in the rental market in particular, because as home ownership rates have declined over time, you've got more of your private rental market mix is higher income. The rental market worked pretty well throughout the 2010s because, as you say, we had lots of multi-unit development, massive portion of investors in the market. It wasn't necessarily sustainable from a conservative lending perspective, but it made the rents cheap, right? So if you have more deliberate social housing, you have less competition within the private rental market when rents do start to go up. So the Productivity Commission talked about this too. They made a note about when people get priced out of a rental market, they look to the next most affordable market. And it gets down to the point where there is no next most affordable market to go to. And that's where you've seen an increase in homelessness and more people being turned away from specialist homelessness services over the years as well.
It's a problem.
Okay, well, that's it for today. Thank you so much, Eliza, for coming on to Simplifying Investing.
Thank you so much for having me. It's been a blast. Long-time listener, first-time guest. So it was a lot of fun.
Thanks, Eliza.
For more info on Shane and Diana's podcasts and reports, head to the Insights Hub at amp.com.au.